Hello traders, welcome to your daily market update for Wednesday the 15th of April 2015, and overnight we've seen a fair bit of price action, and that's due to the retail sales figures. That's where things really heated up, and as I mentioned yesterday, it was expected to create some movement in the US dollar index, and we've seen a broad-based weakness on the US dollar, and that is due to the market not really happy with the 0.9% rise in consumer spending. So it did miss the market's expectation of 1.1%. However, it is a great result. It is a bounce back, and it was the best result that we've seen in a long time. So the market was really just a little bit disappointed, and it took this as an opportunity to start taking profit. So the profit takers came in, and we've seen it continue to slide. Now, what happened after that is we did see the bond markets as well as the currency market also price in this move. So we can tell that they are quite serious in the profit taking of the US dollar, and that may continue in the session ahead. So we also had the IMF downgrade forecast growth for the US, and that also weighed on situations. So there was a few things that all just happened all at once, and really, at the end of the day, the market just wanted an excuse to take profit, and that's what we've got. And that was the key story. Now, coming into today's session, as you can see here, we had more weak Chinese data, and I did mention yesterday that should the GDP come in weak, it will hinder on the Australian dollar, and that's exactly what we've seen today. So this data has been weak, and it's only going to continue to hurt the Australian dollar. Now, coming up tonight, we have another ECB rate decision, but the monetary policy statement conference, that's where everybody will be turning their attention tonight, as well as the Canadian interest rate decision. So they're two very key data announcements coming out tonight, and we could see some movement on the back of that. Leading up to these announcements, we could see the continuation of the US dollar taking a little bit of profit, or we could see things just become range bound, especially with the euro. Now, my views with the euro, it did bounce due to the profit taking, but right now the pressure is on the euro just purely on the back of the Greek exit risk issues that are going on. So for while ever there is drama there with Greece, the euro is going to be under pressure. But the ECB meeting is not expected to have a dramatic impact on the currency, as they've already started the bond buying in March. There's no changes expected in April, and Mario Draghi should just probably use this opportunity to talk about the initial impacts of quantitative easing. And he could actually start to emphasise that there are signs of improvement due to the quantitative easing, and this is only going to continue to support the euro. So be careful on his words and see what he says during this. So, but essentially, we've also seen lower rates and a weaker currency. So all of these things are actually going to help Draghi talk about the quantitative easing having an impact. He's also going to mention that they have successfully bought 60 billion euros worth of bonds last month, and they continue to see them having no problems buying the same amount each month into the future. So, in other words, Draghi could reassure the market that QE is off to a solid start. He could also remind us that the monetary policy remains easing, but with QE going well, there's no need for the central bank to really get worried at this stage. So I don't expect the euro to go into a spiralling dive, and we could see the price action get a little jittery as it hinges on every single one of his words. He'll go through a moment there where he'll be talking quite positive about the economy, and we could see a boost. I'll be on Twitter providing more comments on that. Now, the other major comments that we've got coming out, as I've mentioned, is the rate cut, or the potential for a rate cut for the Bank of Canada. It's my opinion that basically they're not going to cut rates. I think that they're going to leave rates on hold. The governor is also going to, he's a bit worried about the Canadian economy, and I think that he is going to emphasise that. But he's also going to say that there wasn't enough justification for a rate cut, and there's no justification for a rate rise at this stage. Oil prices are stabilising, as I mentioned yesterday, and I think overall we've seen a better jobs market with $28,000 worth of jobs created. The housing market was stable, if not a little bit better than expected, along with the housing prices. And the trade deficit narrowed. And GDP contracted, but it was a little bit less than anticipated. So overall, I don't think that they're in a panic stations, and I don't think they're going to cut. Now, if I am wrong and they do cut, you're going to see the Canadian dollar get sold off extraordinarily heavily, as the market isn't expecting this. The press conference will be important if they don't cut, as the future and the comments for what they see coming ahead for the Canadian economy will be what the market is trading on the back of. So it's going to be quite a volatile night. I think the Canadian dollar will be quite volatile. The euro might be a little bit subdued, and we may see the continued profit taking of the US dollar just at this time. Let me go over now to the dollar index chart, and we can have a look in a bit more detail. You can see here that we did take profit. We didn't get above the 100 as I mentioned yesterday, and we've got ourselves quite a bearish candle. Now I think that could continue on as people still look to take profit. We are still very much in a bullish trend, so there's no need to really panic about the US dollar at this stage. Like, major support that we have is still intact, and I think the overall trend for now is going to remain somewhere along these lines here. So even though we haven't taken out the previous highs and we've failed, that is a weak signal. So I think that yesterday's confirmation does mean that we could move back down into this area here in the near-term future. So let's keep that in mind moving forward. Looking at the New Zealand dollar, as you can see, it has bounced quite heavily, and we are looking to go a little bit higher here on the daily chart. If I go to a 4-hourly chart though, it still is in somewhat a consolidation pattern. I'm now on a 4-hourly, and if I show you here, we've got a swing high and a lower swing highs. Now that's consolidating, and we've got higher swing lows. So ultimately, we are consolidating where the swing lows are actually getting higher, and we're moving into a congestion pattern here. So I'm not looking for any major breakouts. The Australian dollar, on the other hand, now this is the 4-hourly chart, and as you can see, it was sold off due to the news. So we had this bounce on the profit taking, and we've sold off. We're now trading at 76 cents. I think if I go back to the Australian, we have started to form a fair bit of support around this area, and it's holding up quite well. So if we continue to see some profit taking, the Australian dollar could be supported. However, with China data and the Australian budget coming out, I think that risks to the downside are still very much in play, and I think Australian dollar is going to continue to be weak. If I quickly dart over here to the Australian dollar versus the New Zealand, as you can see, it's heading lower and making a run for parity where it rejected once again. I think the Australian dollar is going to continue to underperform the New Zealand. I post the consolidation that we have here, and we end up getting that breakout, and I think it's going to continue. The euro had a bounce. Now, as I mentioned, we could be forming a little bit of a double bottom here just for the short term while profit taking continues, and I think major resistance is still intact here, and I'm not hopeful for the market to actually get above $1.10. This is a triple top that just really struggled to break. So in the meantime, I think that while the profit taking goes on, we could be looking to trade up into this area. If I have a look at the pound versus the US, now it had a very strong rally, and as you can see, we're still in a downtrend with lower lows and lower highs, but we need to just be conscious of the major resistance level that we have here also. We could move higher if the profit taking continues. The US dollar versus the US dollar versus the Canadian dollar. Now, the US dollar took some profit, and we are back testing here the $1.24 area, which is just there. Now, it's held up numerous amounts of time, and it's going to be interesting to see what happens tonight. If the US dollar continues to see profit taking, and there is no interest rate cut, and they're quite positive about the Canadian economy with oil stabilising and the uptick in some of those economic data I mentioned, we could actually see a break of this. And that could be the catalyst for this major support to be broken. And because it's been so strong, I think the moves could be quite large, especially if the US dollar profit taking continues to build up momentum into the European and the American session tonight. However, if there is an interest rate cut, we will see that this won't even get tested and we'll get a bounce straight back up as the US dollar will ultimately gain strength against the Canadian dollar. US dollar versus the Japanese yen, another big sell-off, but we're still holding above $1.19. $1.19 is a key level that everybody's focusing on. So as you can see, there's been numerous times where it's tried to get below it lately and it just can't. So we'll have to see what happens with the US dollar tonight. But ultimately, we are in a consolidation pattern. So when I move to shorter time frames, I am looking for scalping opportunities. Well, that's it from me today. All the best for the trading session. I'll be back again tomorrow. So until then, trade well.